Welcome everybody to the next episode of the How to Get Funded in 2024 series. I hope you guys have been enjoying the series so far. Now that you guys understand the drawn liquidity, how to build a narrative using the higher time frame, combining that with drawn liquidity, the importance of fair value gap, and then breaker blocks. Now that you guys know all of those things, it's time to blend it together to go ahead and use the unicorn model, which is going to be the model and strategy that I recommend you guys use for 2024 to get funded. Now, I have made a video on this specific strategy and model on my YouTube channel. I'll go ahead and link it somewhere around here. In that video, I basically explain what the unicorn model is, but I'm going to explain it here as well. But I actually show like live chart examples in that other video. So I'll link it somewhere on this video here, so that you guys can go watch that and then maybe come back to this video, because in this video, I'm primarily going to backtest with FX replay completely using the unicorn model. We're not going to take any trades besides the unicorn model on FX replay. If you guys haven't ever used FX replay, you guys know that you guys can't rewind like on TradingView. You can't mess up and then rewind. You have to like stick it out through the whole session. So we're going to go on FX replay and I'm going to go ahead and backtest probably like 2 or 3 weeks, show you guys how effective the unicorn model is. And that's literally all we're going to be taking on the FX replay when we're backtesting, is just unicorn models. Anytime it appears, we're going to go ahead and put on a trade. So anyways, the unicorn model in simple terms is just a fair value gap and breaker block combo. In my opinion, this model is the best, one of the best, if not the best ICT beginner friendly models out there. Some people are going to say this is basically the 2022 mentorship model. I disagree with that, because in the 2022 mentorship model, ICT basically says you need a breaker structure and a fair value gap. He doesn't mention a whole lot of the breaker block combo with the fair value gap, but this is a very, very simple and very beginner friendly model to use. And even the advanced ICT traders like myself use this model on a daily basis, just because it has a very, very high win rate. And I recommend you guys use this model as well in 2024 to get funded over 6 figures like I have. Now, that is basically the unicorn model. It's just a fair value gap and a breaker block combo. In this example, this is a bearish unicorn model. And if you just invert it, this is a bullish unicorn model. So for the bullish one, you just have a low, higher high, lower low, and then you get that breaker structure. You have your breaker block right there. Then you have your fair value gap combo. It's overlapping, and you take a trade in the fair value gap with the breaker block, and you target internal and external liquidity. Very simple. Same thing for the bearish example. You have a high, low, higher high, breaker structure, breaker block, fair value gap combo. Take the trade, place your stop above the high that formed that fair value gap, and then you target internal or external liquidity, whatever the case may be, right? Once you understand drawn liquidity, how to build a narrative with a higher time frame, where is the daily and weekly candle going to expand to, the unicorn model on lower time frames such as the 1 hour, 15 minute, 5 minute, and even 1 minute become very, very effective. So again, guys, if you guys haven't watched my other unicorn model video on my channel, again, I'll link it somewhere in this video. I'll link it once or twice or something like that. Go watch that, come back, and then you guys could see, you guys will have a little more understanding on the unicorn model. But in this video, again, we're just going to be back testing the unicorn model and basically me showing you how effective it is. Now, one more thing. In this series, I am going to be recording a video of me live testing, not back testing, because this video is going to be all about back testing. But in another video later on in this series, after we go over risk management and some other little concepts that I want to tell you guys about, so that way you guys increase your win rate with this unicorn model, I'm going to be making a video of me live testing a 150K Top Step account and passing it using just the unicorn model and everything we've laid out in this series. I'm going to be live testing it. So the way I'm going to do that video is I'm going to buy a fresh 150K Top Step combine, and every time I see a unicorn model, I'm going to take it on that Top Step combine with defined risk and TPs. So everything I go over in the series, I'm literally going to blend it all together at the end of the series with this episode. And anytime I take a unicorn trade, I'm going to review it and recap it for that account until I pass it and even get a payout, so I can show you guys how effective this model is. And this is literally all you need to get funded and to get paid out in 2024. So you could do this on FX firms, you could do this on Forex. It's a beautiful model, guys. Trust me. But enough of me yapping. Let's get into the back testing of this unicorn model and show you guys how effective this is. All right, guys, so I am using FX Replay for this. I've only used FX Replay a couple times. I'm not super familiar with it. I just tweaked the chart colors here. And I'm going to start this at the beginning of October. Now, if you guys have never used FX Replay, you can't mess up on FX Replay. Like, this is like literally almost live testing in a sense, because on TradingView you have your replay. So if you mess up, you can actually like replay it and then go back and, you know, redo everything. You can't do it on FX Replay here. Anyways, with that being said, we're going to go ahead and just back test the unicorn strategy. Anytime I see a unicorn setup, we're going to take it with about 2% risk. And again, guys, don't worry about the risk management strategies here for at the moment, because I'm going to make a video after this one showing you guys like how much you guys should be risking for the unicorn strategy. So we'll be going over a risk management strategy in the next video after this one. So don't worry about the risk management on this video. I'll explain it briefly, but there will be a more in-depth video on that coming after this one. So with that being said, guys, I'm going to go ahead and start the back testing session here. I'm going to use a 100K account, and we're going to see how far we can get this 100K account just using, again, just unicorn setups, no other concepts, just the breaker block and fair value gap combo. We're going to see how far we could run up this 100K account. And yeah, guys, I'm excited. So let's do it. So let's go to our higher time frame and see what we are working with. So right off the bat, I see that we have a liquidity sweep here. So let me go ahead and do that. So we have sweep of sell side liquidity here, and we're retracing into a daily fair value gap here. So let's go ahead and mark this out. So we have a daily fair value gap there. Drag that out there. So we're hitting about the consequent encouragement, which is the halfway point of that daily fair value gap. So we start zooming into our lower time frames here. Let's go to the 4 hour. We're actually ending off the week here. So let's go to the 1 hour again. And let's go ahead and start playing this. Actually, let's actually go to the 15-minute here. Let's go ahead and start playing this. So we're on a Friday here. So if I start playing this here, this is where we open up the week. Again, guys, before I actually start this, we have to see what type of news is going on for the following week. Because if you guys don't know, at the beginning of the month, it is NFP week. Every single, like the first Friday of every month, that is non-farm payroll week. That is a very important week because Monday, Tuesday, Wednesday are very high probability days on those weeks. And ICT even says you should be done, if you're a beginner on NFP weeks, you should be done trading by Wednesday. So that is very important. So if we look at the economic calendar for this week, specifically beginning of October, we can see that we have high impact news here on Monday, which is obviously coming into fruition here. So we have Monday, October 2nd, we have Fed Chair Powell's speech at the end of market close. I'm in Central Standard Time, guys. I have my thing set to Chicago here. Now I do, because that's what I'm used to. It's an hour behind New York time. So now you see how the time changed now. So now we have a 10 a.m. Fed Chair's Powell's speech. One thing I do want to say before I go ahead and start this again is I really avoid anytime he talks, Powell, anytime he talks, I try to avoid that. So we have PMI an hour before that. So maybe we get a setup here, maybe we don't, we'll see. And then we don't have any news Tuesday. We have news Wednesday, PMI, ADP employment change. And then Friday we have NFP. So we have news Monday, Wednesday, and Friday. We don't have any news Tuesday and Thursday. It's just something to look out for every single week. Just make sure you guys are paying attention to the high impact news anytime you guys are trying to, even trade in general, right? Maybe you're not using this strategy, but if you are using this strategy, again, make sure you guys are paying attention to the economic calendar. A good website for that is forexfactory.com. You guys could look at all the high impact news there. So let's go ahead and start the back testing session here. Again, guys, remember, anytime we see a unicorn setup, we are going to take it, okay? So let's see, do we have equal? We actually have equal lows here. So let me go ahead and mark these equal lows for you guys here. Perfect equal lows there. The week just opened. What did I do here? I just went ahead and locked this. There we go. Okay, so we have perfect equal lows here. Let me go ahead and mark those again. My mistake. Boom. Okay, cool. Perfect equal lows. Now let's go ahead and start this. Finally, enough of me yapping. Sorry, guys. So let's go ahead. So market open for me is going to be 8:30 in the morning since I'm in Central Standard Time. Again, that's what I'm used to, guys. You guys could keep it on EST, which is New York time. See if we get some sort of unicorn setup. There was a unicorn setup here. And you guys remember how I said you guys could group up the breaker blocks? You know, you guys could use this one alone, or if it's like grouped up like this, you could use it technically as one. You have a stab into that fair value gap there, and then it drew down to these sell side levels and left equal lows for Friday. So that was a unicorn setup there, but obviously we're going to be back testing October. So let's see. So we're going. This is London session here. Going. Let's see. Market open again for me is 8:30. See, it's going. We go ahead and pause this really quick and drag this line out. Boom. So we're getting close to market open. So market open for me is in about 45 minutes. Let's go. Yada. Okay, cool. So, okay, let's see what the next 15-minute candle does. Okay, cool. So we actually do have a unicorn setup here. So this was market open. We had a nice push up. We have buy side liquidity up here and up here. So let me go ahead and draw the buy side right here. Again, guys, that gray box up there is my daily fair value gap that we had marked out. Now we have buy side levels up here. Now, guys, do you guys see this breaker block down here, right? This is a 15-minute breaker block. It's the last bullish candle before taking out that low. So we have a short-term low, a short-term high, last bullish candle before taking out that low. Then we have that swing low, and then we have a break of structure. We have a fair value gap and a breaker block. They are overlapping. Now, somebody would probably ask, why isn't this a breaker block? Because we have a swing low right here, and then we have a short-term high, and then boom, we take out that low right there. And some people are probably even going to ask, hey, we have perfect equal lows. Now we have relative equal lows, right? Price looked like it wanted to reach down into there. But remember what I said, guys, in the drawn liquidity video. Speed and displacement is key. So we had speed here at the market open. Obviously, the 15-minute candle left a 15-minute fair value gap. So that's where I would start marking my unicorn, right? We have 15-minute fair value gap, and then we have a 15-minute breaker block. So there's a few ways you guys can go about this. Right, you guys could start marking out your breaker block and your fair value gap. And personally, this is just what I do. I like to start getting into a position at the fair value gap. I really don't like waiting for a tap into the breaker block. I really just set limits in the fair value gap, but you guys could definitely stack limits into them. But that's personally what I do. I just go into the fair value gap because a lot of times, maybe you have the breaker block up here and it's perfectly overlapping with the fair value gap. That's perfectly fine if you put it at the top of the fair value gap or the bottom if it's bearish. But most of the time, I just put it at the very beginning of the fair value gap. I don't wait for the tap of the breaker block. So again, this is barely overlapping, but it is valid in my opinion. We have speed and displacement, fair value gap, and a breaker block right here. And it is overlapping. So I'll go ahead and place a limit here and even down here. So let's go ahead and place order, and we're going to do 2%. We're going to 2% on a 100K account, and we're going to place a limit. Actually, let's go 1% at the limit here, and then another 1% limit there at the breaker block. So let me go ahead and do limits, and we're going to do an entry here at 14,904.50, 14,904.50 with the stop loss. We'll do a stop loss. So for the stop loss, guys, I know I've mentioned that I like to put it below the candle's low that forms the fair value gap. That's usually where I put it. But if you want wiggle room, and since I'm doing two limits here, I'm going to put the stop loss below the consequent encouragement, which is the halfway point of this candle's wick right here. So I'm going to put it right below that, which comes in at 14,836. So let's do 14,836, 1%. Our take profit is going to be, so this high looked like it wanted to take out the London session high. So we're going to put our take profit there at 15,0110, 15,0110, 15,010. Sorry, guys, I'm over here tripping. So 15,010.75. Okay, so that's where we're going to put our take profit if we get tapped into this unicorn setup here. Not the best risk to reward, but we're also going to put another limit down here. So let's go ahead and save that. So that is what our position looks like right now, or our limit buys. And then we're going to do another one as well. So 1% down at that breaker block. The breaker block comes in at, let's see, 14,877.50. So we're going to 14,877.50. And then our stop loss is going to be the same thing there at 14,836. Okay. And our take profit is going to be 15,010.75. Okay, so this looks like a better RR, right? And then we're gonna save it. So we have two limits, same stop, same TP. Let's see what happens here. Let's go ahead and play it. Push up, push up, push down. We don't tap into it. Okay, so here's the thing. So we took our initial take profit. We never got tapped in. I would leave the limits here because of the simple fact that price reached up and it looked like you wanted to take out this buy side. So we just took out London session. So now I would start to, after seeing this, now I would start to move my take profits up here. Okay, I would still leave the limits there because the unicorn is still valid. We never tapped it. Okay, now some people might see the displacement down with speed, but we need to see what the next couple 15-minute candles do. So we start coming down aggressive. So we're tapped in there and we tapped the middle of this 15-minute fair value gap. We didn't close a body candle below it, which is good. Now we are in lunchtime. So I personally don't trade lunch, but I would still keep this open again, guys, because, and that's the second tap there on the limit, because the unicorn is still valid. And let's see what happens here next. Okay, push up, push up, push up. Now we're in profit. Now we're getting nice displacement. We're coming back down. We just swept sell side again. We're still holding this breaker block here, and we're not closing below it, right? We're not closing below the consequent encouragement, the midway point. We have no body candle closures below that, which is a good sign. And we're not leaving any fair value gaps to the downside here in this displacement leg down after sweeping sell side, which is a good sign too on the 15-minute. And notice how I'm not switching to the 5-minute, 1-minute, etc. I'm sticking to one time frame only, okay? This is personally what I like to do. I like to stick to the 15-minute, 5-minute, and now we're pushing up. And we are coming to market close. So if I was trading and this was live and I seen that the market was about to close, because I just noticed that market closure is at this candle here, I would personally actually take this off because I don't like swinging into market close or after market close. I don't really like swinging in the environments that we're in. So I would personally take this off going into closure. So let's go ahead and actually close this before the next trading day. So amount to close, 100%, close that. And we're going to go ahead and close that. So we made about $1,500 today just off this simple unicorn setup here. So let's go into the next trading day, and let me go ahead and delete all these drawings so it doesn't get confusing. So again, guys, we're pretty much in a range right now starting off the week. We have relative equal highs and then perfect equal lows down here with the relative equal low as well here. It looked like it reached down to that. So we're pretty much stuck in a range starting off the week. So let's see what happens here as we go into our next trading day. So this is pretty much Tuesday's daily candles opening. So let's see what happens here. Again, guys, we're only taking unicorn setups, remember. See, we're pushing. So market open for me is going to be at 8:30. So let that play out there. So market open is right here for me. Okay. So let's start looking at our 5-minute chart. Do we have any unicorns? We do not. So let's go to the 1 hour. Let's see what's going on in the 1 hour. Okay, so if you guys notice, we do have a unicorn set up here, right? We have a fair value gap and we have a bearish breaker block right here. So let me go ahead and mark this out. So we have a bearish breaker block right there. Go ahead and mark that breaker block out right there. This is a 1 hour bearish breaker block and a 1 hour fair value gap. So we just opened market. If we go back to the 15-minute time frame, actually, let me mark that 1 hour fair value gap right real quick, just so you guys are not confused. Boom, right? Pretty much a overlapping thing, right? It's a breaker block and a fair value gap combo. Super easy. Let's go back to the 15-minute. So we just opened market right here. Let's go to the 5-minute actually as well. Let's stick to the 15-minute. Actually, you know what? Let's stick to the 1 hour. I don't want to zoom in too much. But this is where I would start to market buy just at the top of this fair value gap. So again, we're going to do a limit, like a pretty much like a pyramiding entry. I'm going to go 1% here and then 1% at the breaker block here. Now, the fact that the breaker block is overlapping a little bit in the higher portion of this fair value gap, I'm going to, again, have some wiggle room. I'm going to have my stop up here. So I may just go 0.5% here because this could expand higher for a Judas swing on the 15-minute. We just opened market. Let's actually go ahead and play another 15-minute candle and see what happens here. Okay, so we just tapped into this 15-minute fair value gap with a 15-minute breaker block as well. So we have 2 unicorn setups on 2 different time frames. So go back to the 1 hour. We're tapping into the breaker block. We just took out that high. So this is where I would start to market entry, right? Once I start seeing that, we're 15 minutes into market open right here. So this is where I would start to market short because we have a 1 hour unicorn. So let's go ahead and market short here. We're going to do 2%. And since it just took out this candle's high, because I like placing my stop losses at the candle that made the fair value gap, like I would place it right here at this candle's high. But since we just took out that high and we're in this breaker block at the consequent encouragement, which is the 50% point of the breaker block, we're not closing a body candle above it. Neither are we closing a body candle above the 1 hour fair value gap. So I'd place my stop above this high. And if you want extra wiggle room, you could place it above the swing high here. So I'm going to place it above this high right here. I don't want too much wiggle room right now. So let's go. Entry is going to be market. Stop loss is going to be 15,012. 15,012, risking about $343. So actually, let's do, if we do 2%, we'll do 2%, 1502. And then since we have perfect equal lows and we have relative equal lows and price looked like it wanted to reach down for these lows, I'm going to go ahead and target these lows down here at 14,811. That is going to be $6,800. So if this trade hits, we make 6,800. If we lose 2%, which is totally fine because yesterday we made $1,500. So let's go ahead and market. Oh, actually, it just changed because I had a limit. So entry is going to be market here. Risk amount. Actually, let's do a 3% risk because let's do a 2.5% risk. 2.5. So we're risking 2,500 to make 5,600. Okay. Everything looks good. Let's go ahead and save. Oh, because I need a sell. Save. There we go. So I have my stop loss right above this candle's high right there. Right there. And I have my take profit at these lows. Okay. So let's go ahead and see how this plays out. Let's go back to the 15-minute time frame really quick. Boom. Okay, obviously that just went crazy. Okay. Okay, so I promise, guys, this was not planned out. This was just, I'm just looking at these unicorn setups and taking them as they come. So again, 1 hour breaker block, 1 hour bearish breaker block, 1 hour fair value gap. We do not get a body candle closure above it or above the halfway point of that bearish breaker block. Remember, guys, we have a high, low, higher high, takes out the stops, breaks the low, retraces back into it, market open. 15 minutes into market open is where we start taking our positions, place our stop here since the high got taken there, and then we put our TP at these perfect equal lows and this low that looked like it wanted to take out that low. So there's a bunch of sell side liquidity here. There's a bunch of stops resting there. So as you can see here, boom. I'm telling you guys, the unicorn setup is a very high win rate model, and that's why I like focusing on this, and that's why I wanted to show you guys the unicorn model, because it's a very good beginner friendly model and it has helped me get a lot of payouts. So we're up 7% on this account. We're up $7,000 for the week. This is honestly where I would start to call it a week because it is non-farm payroll week. And did we have news? No, we didn't have news for Tuesday of this week. So it's non-farm payroll week. We should be done by Wednesday, but as you guys can see here, we took out that low there. So let's go ahead and see how the rest of the day plays out. Let me go ahead and fast forward this just because It's going to take a little bit longer. So we come down, we take out this low here. We come down and take out this low, and then we left equal lows right there. So if we go to the 1 hour real quick, it's moving a little too fast now. We're moving on to the next following day. Okay, so we left equal lows right here, but I believe that we took the low out on ES, because whenever we have like lows like this and we refuse to take out that low, we might have an SMT divergence. So let's go ahead and check ES really quick. So we did have an SMT divergence there. So let's go back to NQ. So these lows can stay valid. Guys, you guys don't have to worry about SMT divergence right now. I will be teaching that in another video here in a little bit. So let's go ahead and start zooming into the 15-minute. Let's see if there is any unicorn setups here that we could have taken in pre-market. And there was. Okay, so we have a bullish breaker block right here on the 15-minute. So if you drag that out there, I didn't see this, but this was in pre-market, and you guys could take trades in pre-market. I personally don't like to, but you definitely can. So you had a 15-minute bullish breaker, and then you had a fair value gap overlapping right there. Do you guys see that? 15-minute, boom. If I do take trades in pre-market, I will do a little bit lower risk, like 0.5% or 1%. Just because pre-market and market open is very volatile at market open, and pre-market, like when you have moves in pre-market, market open usually kind of not almost all the time, but it usually does reverse the pre-market moves most of the time in my experience. But that's why I like risking a little bit lower in pre-market if I do decide to trade there. But as you guys can see here, bullish breaker block, 15-minute fair value gap, refuses to close a body candle below that. This is where you can market entry right there. You could also place limits, down here at the breaker block. Refuses to close below the halfway point, which is all a good sign. Again, I like to place my stops here, but when you're in pre-market and you have kind of a scrunched up unicorn like this, you could always, again, if you want more wiggle room, you could always place it at the low down here, or you could place it at the short-term swing low, which is right here. So could have took a trade there and targeted internal buy-side liquidity there at the form of equal highs, as well as right there. And then remember what I said about fair value gaps, guys. They're like draw on liquidity. So obviously price moved up and drew into this 15-minute fair value gap there. I'm going to start deleting these drawings because they get a little bit confusing. But as you guys can see there, it draws up to that fair value gap there on the 15-minute, unicorn there in pre-market, beautiful. And then we start just pushing up for the day. So I probably would not have taken a trade anywhere around here besides this one, because again, we're focusing on unicorn. I wouldn't have took a trade anywhere here. We're already up 7% for the week, so that is very, very good. So let's go ahead and see what happens for Thursday of this week. Again, we have relative equal highs up here, right? We have relative equal highs up here. So I think that's where price is going to go. We have a change in the state of delivery here. Unicorn is pushing. We're invalidating all these fair value gaps. Let's go to the 1 hour real quick and see what we got going on in the 1 hour. Yeah, we're pushing above 1 hour fair value gaps. You guys notice here, we did make a new low off this 1 hour fair value gap, but we're closing right back above it. So let's see what the next day brings. So we have market open right here. So 9 a.m. So we do have a bearish unicorn here. We took out that high, short-term high, but we are displacing above. Actually fast forwarded this a little bit. So I wouldn't have took this simply because we have, let's check the 15-minute. I went a little too fast. I apologize there, guys. So on the 15-minute, we do have a bearish breaker block and a fair value gap. I honestly probably would have took this if I'm being honest, but I probably would have been stopped out. I went a little too fast here, guys. My bad. Let me go 1. But if we look at the 1 hour here, again, we're breaking the structure. We're disrespecting fair value gaps. Honestly, I don't know if I would have took this bearish unicorn because, again, we're disrespecting fair value gaps. We have an SMT down here. We have stack liquidity up here. So it wouldn't have been a very smart idea to take a position here in this unicorn because again of all those factors, right? We have a break of structure, we're disrespecting bearish fair value gaps that sent us to new lows, breaks of structure, and we're disrespecting all bearish PD arrays in the form of fair value gaps and even breaker blocks. We're closing above the 50% of this bearish breaker block here, right? We're closing a body candle above it. So maybe I wouldn't have took this, maybe I would have. I don't think I would have, honestly, just because of the situation here. So let's go ahead and fast forward this. I don't want to waste too much of you guys' time. I'm just basically back testing this unicorn model for you guys. And again, I'm still going to live test it with a fresh Top Step account and show you guys that it's very, very simple to pass these accounts and even get a payout with them. So let's go ahead and fast forward this till Friday, which is NFP. Let's see what's going on here. It's 15-minute. Make sure I don't pass myself again here. 8:30 is the opening for me. Actually, 7:30 is going to be NFP. So let's see what happens for 7:30. So if I click this, is okay. So this was NFP release. We sweep sell side. Let me go ahead and delete some of this drawing. So these equal lows are valid. They can stay equal lows because we have that SMT. Again, more on that strategy in another video that I'm going to be making in this series. But we go ahead and swipe sell side here for NFP. Let's go ahead and see what happens here. We have buy side right up here. Let's see if we get any sort of unicorn setup for this. Let's go ahead and play it. Let's go to the 5-minute. Do we have anything here? No, we do not. We're pushing up. Let's go ahead and fast forward this a little bit faster. Pushing up, no unicorn setup in sight. We just take sell side, reverse, and take out all the buy side here. So that was pretty much the week for me. I'm telling you guys, Monday and Tuesday and Wednesday are very high probability days for NFP week. As you guys can see here, we just kind of railed up for Friday. We took out sell side and then pushed up off this fair value gap, but there was no unicorn there. So then we start the new week off here. So let's go ahead and see. So we ended the first week at 7%, but let's go ahead and see what is going on the higher time frames, right? Let's go to the daily real quick after that Friday. So we closed a body candle closure above the midway point of this daily fair value gap and right above it as well. So let me go ahead and delete that. We're tapping into this top one right here. So let me go ahead and draw out that daily fair value gap. But it is a bad sign that we already closed above this one that made that new low. We still have equal lows down there, but those are valid because of an SMT. But now we are starting the new week off here. So let me go to the 1 hour. Let me see if we have any unicorn setups here. We do not. We only have a fair value gap. We're tapping into this daily fair value gap and 1 hour fair value gap. So this is sticking out like a sore thumb to me. We just took out buy side on Friday. So let's go ahead and see what happens here for Monday. Do we have any news coming up for the week of Monday? So we have Wednesday news. We have FOMC minutes. And then we have news Wednesday, Thursday, and Friday. Okay, so let's see how Monday plays out. Let's see if we get any unicorn setups here. So we're in London session right now. We're getting closer to market open. So market open is going to be right here. So market open, let's go to the 5-minute. Do we see any sort of unicorn setup? Yes, there is, right? We have a 5-minute bullish breaker right there. We just swept equal lows, which is right here. Right, boom. So at the equal lows, then we have a 5-minute fair value gap right there. So we can go ahead and place a limit right here at the 5-minute bullish breaker and the 5-minute fair value gap. So let me go ahead and place a limit right here. So let's place a limit in the amount of 1% right here since it's Monday. Mondays, I don't really like trading on Mondays, but again, we're taking unicorn setup. So entry 15,019. Make sure this is a limit 15,019. And then stop loss, we're going to put it right below this right here. So 14,974. 14,974. And take profit. Our take profit is probably going to be Friday's high. So that's going to be 15,162. 15,162. So risk to reward looks solid here. Let's go ahead and place that. So we have a limit there. Let's go ahead and see what happens here. Okay, so we get tapped in. We tap the bottom of it. We don't close a body candle below the fair value gap. So we're tapped in. We're in profit right now. Pushing up, and then we get stopped out. Okay, so like I said, you guys can either place your stop at the candle's low here, or you guys could place it, if you want extra wiggle room, at the swing low that caused that purge on stops, right? Which would be here, or even the consequent encouragement if you don't want to risk too much, right below it, right below the midway point of that wick right there. But I like usually placing it right below the candle's low that formed that fair value gap. Again, if you guys want extra wiggle room, you guys have different places to place your stop. So let's go ahead and see what happens here for Monday. We push up, we take out morning high, and then we take out Friday's high. So that is unfortunate. We could have won that right there, but again, we're still up 6.8%. We only lost about $300. So let me go ahead and see this. Yeah, we only lost about $300. So perfectly fine that we only lost $356. This is how you start managing risk. So let's go ahead and start to get into the next day, which is Tuesday. We're obviously pushing. This is overnight. I'm probably only going to backtest this week because this video is getting long, but you guys get the whole point of the unicorn setups. And we're actually chilling. Did we close on Monday? Did we close above? We're at the midway point, but we are pushing up. Now let's go back to the 1 hour. We do have a fair value gap here on the 1 hour chart, and we do have relative equal highs here for buy side. So let's go ahead and mark that out. Let's go back to our daily chart. I think I've seen a daily fair value gap. Yeah, so there's a daily fair value gap right above those relative equal highs from the 1 hour chart. So there's a daily fair value gap there. Mark that out. Let's go back to the 1 hour. The session is about to start for Tuesday. Again, market open for me is 8:30, hour behind New York. Go ahead and fast forward. So 7:30 here. So 8:30 is coming up right here. So we do have equal lows right over here, and right below those equal lows is a 1 hour fair value gap. Okay, and then we also have equal highs right up here, and we are in a daily fair value gap. So we're pretty much in a range right now. Let's go ahead and see what happens. Let me go ahead and not go so fast. So we take out buy side. We're pushing up. We're getting no sort of retracements. We're gunning to that daily fair value gap right up there. We left these lows, which is totally fine. Now we're pushing down. Do we have a unicorn on the 1 hour? Possibly. We do. We have a bullish breaker right here, overlapping with that 1 hour fair value gap all the way in discount. Now this is a very far bullish break, or this is a very deep retracement for a unicorn. I'm not going to take this because this is super far. I wouldn't even want to see price get all the way down here. It could definitely tap into it. Let's actually place a limit here. Let's go ahead and do 1%. Actually, let's go ahead and do 2% because it looks like price is reaching towards that daily fair value gap. But this is a very far retracement for this bullish breaker here, and it's overlapping with that bullish fair value gap. But let's go ahead and place a limit here anyways. 15,238. 15. We got limit, right? 15,238. I can go ahead and move it whenever I place it. So 15,179. 15,179. Boom. And then our take profit is going to be the daily fair value gap, which is 15,462. 15,462. This is a pretty good risk to reward, if I say so myself. So this is a pretty deep retracement. If we get tapped into that, that'd be wonderful. So we're about halfway done with Tuesday session. Let's go back to the 15-minute here. Again, we have, let me go ahead and mark out that 1 hour bullish breaker for you guys. So we have that breaker right here. Mark that out there. And then we have that fair value gap right there on the 1 hour. So let's go 15-minute. We had a huge displacement back down to stop out, the chasers and stuff. Let's see if we get tapped in before the end of day for Tuesday. And then we are about to close. So we just closed. So I would take this limit off here. I wouldn't leave it overnight. So I'm going to go ahead and take that limit off. So now we're coming into Wednesday. Go ahead and fast forward this so we can finish off this video. Fast forward into Wednesday's trading session. See, market open is right here. No, that wasn't market open. Did we have news for Wednesday? I think we did. So we had producer price index. And then we have FOMC minutes later today for Wednesday at 1 p.m. for me, which is 2 p.m. EST. So I would wait for FOMC minutes. There's no unicorn anywhere around here. We are looking like we might tap into this 1 hour breaker that we have right here. And then this daily fair value gap, I'm just going to go ahead and delete. Let's go ahead. Let's see. We never tapped into that bullish breaker on the 1 hour. We never tapped into it. We just took out sell side here at this low here from Tuesday's lunch low. Took it out. We're pushing up. There is no unicorn setup here. I mean, let's go to the 5 minute. Maybe there was. No, there really wasn't. So there was no unicorn setup here. So let's go back to the 1 hour, see if we could see something. So there is nothing here that I would have took. So let me go ahead and take off all these lines so you guys are not confused at all. So price does look like it's pushing up towards that liquidity there, which if I go back to the 1 hour really quick, you guys can see there is stacked relative equal highs, and that daily fair value gap is right above that. So that's where I believe price is drawing to using the higher time frame, bias narrative that I taught you guys. So market just closed here with 15 minutes after market close. So let's go ahead and see what happens on Thursday and see if we take it overnight or not. We're pushing. Let's see what we get for Thursday. So we've only taken one trade this week, guys, just using the unicorn model. Haven't really taken anything else because we haven't seen our model. We haven't seen literally no other unicorn model so far. So we have equal highs right here. We're getting displacement down. Did we have? Yes, we had a bunch of news for 7:30. That explains this huge drop right there. But again, guys, we are still bullish. Higher time frame is bullish. We're pushing up. Drawing liquidity, I see to believe is going to be the drawn liquidity. I believe is going to be these relative equal highs because that's where price is drawing to. We actually do have a bullish breaker here. I just noticed this on the 1 hour. I didn't even see that. We have a bullish breaker right here. We tapped the top of that bullish breaker right there after news release, and then we have an overlapping 1 hour fair value gap. I didn't even see that there. So if we go back to the 15 minute, we just dropped news and we are about to open market. Market is about to open right now, and we have equal highs up here from London session. We never took a London session high, which is 3 a.m. Eastern Standard Time. That's when the London session opens. So we have a 1 hour breaker block that we tapped into with a 1 hour overlapping fair value gap. So that is a 1 hour unicorn. We just tapped it. Price looks like it may start to push up. We have to get above this 15-minute fair value gap to really validate us pushing up to there. But again, higher time frame draw does look like it's going to be this daily fair value gap and those highs right there. So you could definitely, you don't have to place limits here. You could definitely market buy right here. And then again, place your stop below that candle's low that formed that fair value gap, which is right here. Now there is another fair value gap right there that price could definitely tap into. But I'm going to go ahead and market buy right here just after seeing that bullish breaker on the 1 hour and 1 hour fair value gap. We're still bullish. Higher time frame narrative is telling me that we're drawing up to this daily fair value gap. So let me go ahead and market buy right here. And since I didn't have a limit and I'm kind of chasing, I'm going to do 1.5% here. And we're going to do market and we're going to do buy. Stop loss is going to be 15,316. 15,316. Take profit is going to be these highs right up here. 15,461.50. 15,461.50. Oh, sorry. I'm tripping. This is the market entry buy. So that is market entry. So now our take profit is going to be 15,461.50. Okay, so we do have a slightly negative RR. It's almost a 1-to-1, but this is perfectly fine because remember, draw on liquidity is very important. And then once you start getting your higher time frame narrative in check and trying to figure out where that daily candle is going to go and where it's going to draw to, that is very important because most of the time it will hit. Combine that with the unicorn model here, 1 hour fair value gap, 1 hour bullish breaker, sorry. And then we had news release coming down, swiping, I believe, short-term sell side. But let's go ahead and buy right there. So this almost is a 1-to-1 here. Let's go back to the 15 minute. Let's go ahead and see how market opens here. Let me go ahead and leave this at normal speed. Again, we have equal highs up here, right below all those relative equal highs and right below that daily fair value gap. So I do strongly believe that we are going to push up to those highs and into that daily fair value gap there. So we come down, and then we push up and take out all those highs. It failed to take profit though at our main take profit, right? We didn't take our main take profit, but I still believe we hit that. We tapped the very bottom of that daily fair value gap. We never swiped those highs, at least all of those highs. Let's go to the 5 minute. So, okay, so this is cool. So this is where I would actually market buy another position here, because we have a, what do we have here, guys? We have a bullish unicorn on the 5 minute, right? We have a bullish breaker right here. Boom, overlapping. Right, overlapping. So we have a bullish breaker right here, overlapping a bullish 5 minute fair value gap. So this is another unicorn model. So I'm going to go ahead, and since I'm already in profit, I'm going to go ahead and do 0.5%. Actually, we'll do a 0.5% here, and we'll place our stop below this candle's low here, not this one. We're going to do it down here because this can retrace lower. As long as we don't close bodies below this 5 minute bullish breaker block, then that is good. So I'm going to place my stop loss down here at 15,376. I'm going to give it a little more wiggle room. Actually, I'm going to place it at the very top of that 1 hour breaker block. So I'm going to do 15,365. 15,365 for my stop loss. And then my take profit is going to be the same up here. So it's going to be 15,461.50. So again, a little bit of a negative RR, almost a 1-to-1, but my draw on liquidity in my higher time frame narrative is telling me that we are going to draw up to that daily fair value gap, because remember, fair value gaps are a form of draw on liquidity. So let's go ahead and save. So we just entered another position here. Let's see what happens here. So we're dancing around our position. So we failed to close a body candle below it. We actually tapped that other bottom fair value gap right there. So that's why I didn't place my stop loss there. I placed it all the way down here to give it a little bit of more of a wiggle room. We have our take profit up here. Let's go ahead and play, see what happens. Dancing around that 5 minute fair value gap, again pushing down, and then take profit right there. So as you guys could see, we pushed down, tapped that other 5 minute fair value gap right there off this 5 minute unicorn, push up. We fail to close a body candle closure below the 50% of this 5 minute fair value gap after this nice reaction after tapping the bottom one. We're not closing any bodies below the 50% level of this main fair value gap here that's overlapping the bullish breaker block. We're not closing bodies below that 50% level anymore. We push up, we take out that, and we tap into that daily fair value gap, getting my take profit. So we've made back our money that we lost earlier this week. And in 2 weeks, we're already up 8.4%. And this is on a Thursday, guys. So we've already hit our weekly objective. So we're coming down. See what happens for the rest of the day here. So I'm pretty much done for the day right there. And then we start coming back down. We start just dying off for the day. So let's go ahead and see what Friday has in store. So Friday we have just one piece of news, which is Michigan Consumer Sentiment Index. So I hope you guys are seeing how powerful this is. Just taking literally unicorn setups, nothing else, and combining everything that I've showed you guys so far. So let's go to, let me go ahead and delete all this. We tapped into that daily fair value gap, took out all those relative equal highs right there that I showed you guys earlier over here. Now we're coming back down. Again, we tapped that bullish unicorn on the 1 hour, took out that. It's literally, guys, you guys do not have to bottom tick or top tick anything. You just have to catch a piece of where the daily candle is expanding to. It's literally all you have to do. You don't have to catch like the absolute bottom and absolute tops to make money. You just need a piece of where the daily candle is expanding to. That's literally it. Like literally, you guys do not need to bottom tick and top tick shit. So took profit. Now, what are we up for the week? So earlier this week, we only lost $356. We made it back with that small scalp there, and then we made some money there. So I hope you guys are enjoying this so far, this backtesting session. So let's go ahead and see what happens for Friday here. Let me go ahead and fast forward this. This is kind of a longer video. I didn't expect this to get so long here. We do have a bearish unicorn here. Wait, let me go to the 1 hour. Is it better on the 1 hour? Yeah, so we have a bearish unicorn here on the 1 hour right here. So let me go and straighten that out. Let's see if we tap into it. Again, I don't like to take positions overnight, guys. I like to wait for market open for New York session. That's just my personal preference. And we're coming into London session here. I don't like to leave limits overnight. I don't like swinging stuff right now in the market conditions that we are in. I like to wait for market open, which is almost here. So this is Friday. Now we left equal lows down here. Left perfect equal lows, and we're taking out buy side, and we have a bearish unicorn right there. So we just took out buy side right there in the form of relative equal highs. We left equal lows. We have a bearish unicorn on the 1 hour right here. Okay. So I could take a position here after sweeping this buy side and placing my stop up here. And now, since it is Friday and we do have more sell side down here. So since it is Friday and we are opening market here, so we're about to open market right here. So here's the thing, guys. When you have equal lows like this and you're tapping into that bearish fair value gap and you just took out buy side and we have that overlapping PD array, which is that bearish breaker block right here, you guys could take positions here. Again, you guys do not have to wait for the tap of a breaker block as long as it's overlapping, right? That's all you need for a unicorn. You don't need the tap of the breaker block. It can tap into the breaker block though. It really can. But when you have internal liquidity like this, you have the external buy side, the external sell side, and now you have equal lows right here, right? This is London session low. Now you have external equal lows, and now you have internal buy side in the form of equal highs overnight. They get swept. You could buy these stops right here, right? And you could short, which is what I'm going to do. I'm going to risk about 1.5% to end the week off here. And we're going to market buy here. And then I'm going to place my stop loss right above this candle's high right here, 15,439. So it's going to be my stop loss, 15,439. And my take profit is going to be these equal lows down here. So 15, I have to place a sell. So my take profit is going to be 15,215, 15,215. So this is slightly above a 1RR. Again, you could risk more if you're more confident, which is what I would personally do. But for this backtesting session, I'm just going to risk 1.5% since we did recover a loss this week, and we're already up like 1% for the week, 1.3%, whatever it is. So I'm just going to go ahead and risk the profit that I made from this week on this Friday because it is, in my opinion, a very high probability play here. Again, we have overlapping PD arrays. This is a bearish unicorn, bearish breaker block on the 1 hour, huge bearish displacement after tapping that daily fair value gap. And then we have more equal lows down here, and we have equal lows left from the overnight session. Internal liquidity has been swept, where we have swept those profitable short positions. So those players are out of the game. Bearish unicorn. Let's go ahead and get into it. So this is what it looks like here. Again, you can take profit here and you can leave runners down here, but I'm going to go ahead and take all my profit here to end the week. So let's go ahead and see how this played out. Let's go to the 15-minute. Market hasn't opened yet. We're very close to opening. I think, yeah, we're 15 minutes away from opening. So let's go ahead and see. So we tapped the one. Okay, so there you go, guys. We literally just did this super quick. So as you guys could see, we tapped the bottom of that 1 hour breaker block, right? Let's go to the 1 hour. We tapped the bottom of that 1 hour breaker block right there. And then we completely displace to the downside and take out those relative equal lows left from the overnight session in this external liquidity. Remember, guys, external liquidity, and then we take out internal liquidity, bearish unicorn setup. You get in right here, you buy the stops, or you could wait for the tap of the breaker block. You don't need to wait for the tap of the breaker block, but in this case we did. and then we push down, we take profit here. You could leave a runner down to here because we have a fair value gap. We have relative equal lows and a 1 hour fair value gap right below those relative equal lows. Again, fair value gaps are a type of draw. It's like a magnet. Think of it like a magnet. And then boom, we end the week off. I think this was 3% this week is what we ended off. So we took an L early on in the week and we recovered that and made some just using unicorn setups on the 5, 15, and 1 hour time frame. I haven't even used the 1 minute. So this is pretty much the unicorn model. I've backtested it for 2 weeks. You guys can go ahead and come into the FX replay or even Trading View and go ahead and backtest it for yourselves. But that is pretty much the unicorn model. It's just a fair value gap and a breaker block combo. Hope you guys enjoyed this backtesting video. I know it's a pretty long one, but I hope you guys enjoyed it. Now, in the next video, we will be going over our risk management strategy using this exact model, the unicorn model. So I hope you guys have been enjoying the series so far. And again, I'm going to be passing a 150K top step account just using the unicorn model on 1 hour, 15-minute, and 5-minute time frames. So stay tuned for that. That's probably going to be at the very end of the series. But I hope you guys enjoyed this and hope you guys enjoyed the live backtesting examples of the unicorn model. And I hope you guys adopt this into your trading plan for 2024 and get funded and get payouts. So see you guys in the next video. Peace, guys.